All right, traders, good afternoon. This is Christian from Tribeca Trade Group, and it is Tuesday, September 13th. What a turnaround Tuesday. Sheesh. Wow. Pretty huge downside price action. You had the S&P down 4.3%, the Qs down 5.5%. The small caps were down close to 4%. Before I get into the details and the nitty-gritty, risk disclaimer in front of you, everything that we're going through is for information purposes only. Please read the whole risk disclaimer right there. So let's get into this for a quick couple minutes here. And you know, I'm not going to take too much time in this video. I think you know, there's some takeaways that I want to go over, but you know, very clearly is that the expectations were just too high for what the inflation report was for today. The CPI came in 0.1, and then it really looked pretty poor once you strip out ex-food and energy, right? This came in 0.6 versus 0.3. So, you know, it's kind of interesting because I don't think that for the most part, most traders are, you know, experts on trying to kind of predict what the inflation numbers are. So you know, I'll be, you know, completely open with you guys, as I usually am in these videos, and basically just stating that, you know, I didn't really have any edge predicting this, right? I did a Twitter space yesterday and we were discussing this, and I was like, well, you know, food, not food, but, you know, we've all seen the price at the pump go down a little bit, but that's not the whole inflation report. There's a lot of other bigger components to the CPI report. So you know, and it's not just the components, but how they're measuring them, right? And when they're measuring them as well. So I had felt that I just didn't have any edge predicting what this number was going to be, and I reduced risk coming into today, right? And I've talked about that during the week, and you know, I even said yesterday I had a little bit of FOMO because, you know, I was listening to a lot of people who are very intelligent about the subject, thinking that this number was going to come in later, but it didn't. So, you know, the takeaway here is, you know, this is kind of the first derivative, right, of how this is impacting the market. Because really what this is impacting the market is what the Fed is going to do, right? Everybody doesn't, you know, necessarily want to fight. It's the old saying, don't fight the Fed, right? If they're tightening and if they're continuing to have to increase interest rates because of inflation, right, that is a major headwind for stocks and for some other areas of the market as well. So when we look at this, right, so we can look at, of course, I go right to Fed fund futures pricing, right? This is what the market is pricing in terms of what we think, or what the market thinks that the Fed is going to do. And, you know, the Fed does like this to kind of go along with what they're going to do. They don't, you know, in my opinion, they're not really trying to surprise the market, right? The market does price this in. So you could listen to this talking head and that talking head make predictions about what they think the Fed is going to do. But for example, right, there was a report out last week, right, and Goldman was like, hey, we're moving our case for, you know, what the Fed is going to do on the September 21st meeting from 50 basis points to 75. And it's like, people were like, ooh, well, that's exactly what the Fed fund futures are pricing in. So they just made their prediction in line with what the market is telling them. So what has changed? Well, you could look at this, and this has really kind of moved pretty decently. And, you know, I put a report in here about this. You know, I put this in every couple of days for members, and we talk about it. We talked about it in the weekend video, but you could see this is what this looked like just a couple of days ago on Sunday, right? It was 72 basis points. And really, when you kind of look at the two meetings combined, right, this is the November 2nd meeting, the market was only pricing in 1.26. Well, fast forward to just a couple of days later to today, and we're looking at 1.48. So the market did adjust decently today to what that CPI report gave us. So now, instead of, you know, looking at where we were, which was basically 1.25, you know, so 75 basis points coming in September, and then another 50 basis points. Now you're looking at 75 and 75 basically. So again, more, you know, more headwinds. Right. So now you're looking at 75 and 75 in the next two meetings. So again, that's just more tightening and more liquidity coming out of the market. So the market adjusts to that, you know, pretty quickly. And, you know, that's kind of what we saw today. Right. Now, so we went over the performance. You could also take a look at what bonds did, and I think that this was one of the big question marks yesterday, right? Bonds were not rallying, right? You often hear that bonds are the smart money, right? And stocks are not this necessarily. I'm not going to use another adjective, but they're not. But they're not the smart money. Bonds are the smart money. If you look at what bonds did all week, right? They did not rally with equities, right? And in fact, every rally that we saw in bonds over the last couple of days, like 3 or 4 days this week, this week and last week, we saw the bonds basically, were up in the beginning of the day and they sold off, right? Which is what we kind of have been seeing with equities, throughout different times of this year, where there's been a bid in the morning and then it gets sold off. So I think bonds were kind of the tell that they didn't rally. We talked about this, I think, in yesterday's video, that TLT actually took out the lows. So, we've got higher rates. We did take out another Virgin point of control. Now, I know, I read Helen Meisler's report. That's, her column every day. And she was saying, I think that the daily sentiment index for bonds was about, I think for TLT, was about a 13. So we're going to be getting pretty oversold here. And I don't know if that kind of gets it, even though bonds were up today. So I don't know if that's going to push it to the single digits, which I know that the daily sentiment index, when you do see single digits, it could make for a reversal, right? So, but regardless of all that, I think that was, this is why we pay attention to what bonds are doing, right? That can also give us a tell. Now, the other thing that's an issue here is what the dollar did, right? So the dollar was up 1.4% today, right? That again, and look at the volume today in this UUP ETF, right? So the trend is intact here, right? We kind of came into the 20-day moving average. We sold off pretty hard over the last week. Well, that's a pretty significant bounce, right? And again, the major takeaway there when you're talking about a stronger dollar is just like with higher interest rates, just like with tightening that the Fed is doing. These are headwinds for what equities are doing. So it's very, very difficult for the market for equities to overcome these type of headwinds. And you could see the reaction today, which the S&P was down 4%. So number one, that's a pretty big rejection of the value area for the month, right? So we kind of rose up into this, right? And also what was particularly telling was we did take out that Virgin point of control, right? And sometimes this is what you see, not all the time when you have a Virgin point of control takeout like this. Sometimes it's digestion, sometimes it's a little bit of a fade, but this market has been very, very fast when it doesn't like something, right? When it doesn't get what it's looking for, it can turn pretty quickly. So where does this leave us at this point, after a move like this? Well, we'll see if what I would really be watching here in the next couple of days is whether or not these lows get taken out, right? So we do have a pivot here, right? Which is a higher low, and regardless of today's, really, really horrible price action, to the downside, we're not even back to where we were back on 9/7. All right. So, put this in perspective, right? That's we haven't taken, we did take out 3 days of gains, it looks like, but we didn't take out this particular day. We also left this Virgin point of control kind of lingering around. We almost took that out. Remember, on this particular day, I was saying, wow, we really came close to this, but didn't take it out. So I'm wondering if we do come down here and maybe take this out, and then we might have, another chance at, just like we saw with this Virgin point of control, a flip to the other side. All right. So there you go. Now, so again, very tricky, very tricky trying to, predict what the inflation report is tomorrow, today. And I'm jumping ahead. I would remind you too, that we are going to have, if I can bring this up correctly, and let me get the right screen, but tomorrow we've got the PPI report. Now, I'm not saying that if this number comes in less, I don't know if that completely flips the market back up to the upside. But, you just kind of have to see in what the market does, so, the for me, like, and how I translate this into trading is I don't, just like I didn't really want to have a lot of exposure going into the CPI report, I don't really want a lot of exposure going on into the PPI report. Why? Because there's a lot at stake, right? Just like today, there was a lot at stake with a report that came in higher than expected. It's kind of again, I'm not saying that the PPI is more important than the CPI. I think, in fact, that the CPI is probably more important. But that said, if this number comes in, and misses and is less than expectations, right, you could have another decent size reaction. Okay, so again, I don't have a lot of edge in crystal ball stuff and trying to predict what that number is going to be. I would rather just react to it, right? And I think, there's a couple lessons, and we did about, for members today, I did about 45 minutes today, talking about this market. And, first of all, this market, I don't care if you're a bull or bear. I think the market has been difficult for both bulls and bears, right? So I know every time that the market rallies, there's victory laps by the bulls. I know every time the market sells off, there's victory laps by the bears. But I don't really, unless you're really legged considerably, and you're bearing the brunt of this pain as the market goes up, like, there's not a lot to really kind of cheer, unless you kind of legged into this move down today. I just think it's overall, to be realistic, right? Because again, every time that we rally, there's victory laps, and every time the market goes down, there's victory laps. So I really question the fact that if these people are actually really trading, because I think it's a very difficult market. Because even if you got short in here, you might have gotten back to flat. I don't know, right? So, and in any event, if you were long here, right, you probably got hurt on today if you weren't wise and taking profits into this too. So just keep that in mind when you see all the victory laps. I don't think half the people on Twitter really trade. I think they've got a viewpoint and they're going to express it. Now, I think that you could really, so bottom line here is, I think if you can kind of remain in the middle, right, and use logic, right, and be a risk manager, right, and use probabilities in your analysis, you could play this market a little bit, both sides, right, and you could kind of take advantage of the perma bulls and the perma bears, right? So I think that's what it's really about right now, because I don't think this year has been easier for either side. I think you've been able to make money on either side, but certainly not every day, right, this year. So it's been a tricky environment. One of the things that I wanted to share with traders is that I think that, and I'll go over my trading blotter, but I think this right now, right, until the Fed pumps the brakes on raising interest rates, and we will get another Fed meeting next week, but I don't, right now, unless something changes, I don't anticipate them changing the status quo of saying that they're battling inflation, right? So until they actually pump the brakes on raising interest rates, playing defense is the #1 priority. And I was using a bunch of football analogies because football season just started, and I love football. I love the fact that the Giants won their first game of the season. So very surprising, just to go a little bit off tangent. But, defense wins championships, right? That's something that we know in football, right? Sometimes it's big offense that gets to the Super Bowl, but usually the team that has the really good defense wins championships. And I think that you gotta have to think about it the same way, and being, in this market right now, taking care of your risk is the priority right now, right? And making sure that you don't sacrifice too many profits, right? Another thing that we've been talking about too is September is the weakest seasonal month, right? We are now getting to the point where we're almost halfway through September, right? So today's what? Today's the 13th, right? So, and if I said the 12th earlier in this video, I apologize. I may have said that, but regardless, it is the 13th of the month. We're almost at the halfway point. So we know that the back end of September too can also be very weak seasonally. Now, that's not the only factor that's out there, but if you're a risk manager, you want to know these things. You want to know when the weakest time of the year is seasonally, and also the strongest time of the year too, right? It kind of can help you a little bit with your risk management. All right, so that's what we have going on right now. A couple other things too is, in terms of charts, I thought that there were some things that held up pretty well today. The agriculture names up until about lunchtime, then they started to really kind of trail off, but there was some bright spots. One other thing that I want to talk about before I talk about some single names is what the VIX did today. Right. Notice we touched 28 today. This VIX is having a tough time breaking through that level. Now, we did get higher than these peaks about a week ago. So, there was a lot of VIX call buying that I saw today. So we'll see. I think this is going to be interesting what this PPI report comes out tomorrow. And if it comes in hot, right, you might see a 30 in the VIX tomorrow. Right. So again, what are they looking for tomorrow? PPI negative, also a negative 0.1, and so very similar data points for the expectations. So if this number comes in hot, right, you could see a VIX of a 30 tomorrow. If it comes in low, like people were expecting for today, you might see the VIX go back to like a 25 in that range. Okay, so again, but I don't have a crystal ball. I can't tell you what that number is going to be for tomorrow. Certainly not many could predict, and I don't think anybody could really predict what that CPI number was going to be. Right, if you may have gotten lucky, but that's fine too. All right, luck is sometimes good. When we look at the performance, so I wanted to mention that as well. I thought solar was interesting today. Right, if you look at the solar charts and some of the names in the solar ETF. Right. So why is this important to kind of go through this exercise? Because we try to do is really focus on where the relative strength is in the market. I've said this before, and I've said this in many videos, right? You will find potential leaders in this market where when the market goes down and names basically just go sideways or just go down a little bit, right? As you could see, the solar ETF doesn't really look like there was much volatility today. It actually went up after the open. So it didn't finish on the highs, but the market just got hit a little bit too hard. But this is a group to watch, right? And ENPH did a pretty good job today. I was able to actually take a target at right around the highs of the day at 311, and I kept a portion of the trade on. But I think that's telling you something right now, right? So if you look at the solar ETF, which is TAN, and if you look at the movers, right? Another one. Now, again, there's a lot of international exposure in this, but you could see that there was nothing. CSIQ is another one. Sorry, I take that back from nothing. Now, CSIQ has not been, broke down a little bit, but I thought that this was interesting. Even though First Solar was flat on the day, you look at this and you're like, wow, that's actually pretty darn good, right? I thought this, to get out of this group, I thought this AEHR was really good. This is one to watch for tomorrow. ALT, which, I didn't talk about this too much yesterday, but the administration, right, is talking about possibly trying to defeat cancer, right? Are they going to provide any funding for that? Are they going to, contribute some money to biotech companies for that? I don't know, but this is one name that's been seeing a lot of, some call buying here and there, and it's holding above the 20-day moving average. Again, this is just one company, but you could start to kind of sift through some of these companies that are heavily involved in cancer research, and I think that there might be some opportunities there coming. All right, so that's another idea as well. So I still think that there's opportunities out there. Also, I think there's opportunities on the short side, right? One of the things that I, continuously get questions about in the trading room, which is fine. That's what I'm here for, right? I get a lot of questions about the FANG stocks, right? What do you think about this name? What do you think about that name? So first of all, the way that I would look at some of these stocks is, and I gave this another analogy, right? These stocks, when you look at a chart and whether you're, deciding whether or not to commit capital to a name, they should be selling you, right? You shouldn't be selling it, right? You shouldn't be saying, oh, geez, tell me if this name is looking good or what, I mean, you really want to make your capital is a resource, right? Only commit your capital to the best looking setups, right? The name has to be doing something exceptional, or should be doing something exceptional for them to get your money, right? So don't get sold by a company, right? They should be selling you, right? And that setup has to be pretty good, right? I talk about three. So this is a chart that I put out this morning, and I said it's a bear setup, and I did take this trade this morning as a setup. But you should have a couple reasons, right? And I talk about this in my end of day videos quite a bit. But you should have a couple reasons for why you're buying a stock, right? And it's not that the price is down, right? That should not ever be a reason that why you're buying a stock is because the price is down versus where it previously was. All right. You should have three reasons. So I have three reasons why I'm shorting this name, right? So what, and again, it's not because the price is down. So number one, you've got a technical pattern here. You're breaching support, right? We don't have support down here until basically 117, right? The other that this has been showing relative weakness. Now, this still is kind of reason number one is that the chart looks very weak. It's been showing relative weakness. When the market has been rallying, Meta or Facebook has not been rallying with the overall market. All right. So that is not relative strength. That is relative weakness. Remember, typical what traders do is they go long strong names and they short weak names. All right. That's number one. Number two, I don't see anything going on in their business that is growing the way it used to grow. TikTok, right, is a big competitor for their Instagram business. TikTok is eating their lunch, right? I think that really this has been going on for a while now. It's nothing new, but kids are using TikTok over Instagram, right? For whatever reason, I'm not on either one of these platforms, but I do speak to, I know people that are younger than me. I have a niece and nephew. Most of them are, most kids are using TikTok now, right? Now, of course, they have other businesses too, but I don't know anybody who's really excited about Facebook these days, right? Does anybody get excited about going on Facebook, right? So they still have to turn the corner on the metaverse, right? So that's a lot of challenges. Now, what else? I mentioned that I like to have three reasons. The third reason is this number is always under regulatory insight, right? So that's not good for a company when when regulators always want to go after you about different things. Okay, so that's three reasons, right? So same thing. All right, when you're looking at, so that's something on the short side. That's why I'm in this, but on the same thing for the long side, right? Because I tell you, I get too many questions about names that look sideways, that are underperforming the market, right? What we're doing here at Tribeca Trade Group is we only want to own the best names, right? The last analogy that I give, and I apologize if you listen to my midday video, I gave this analogy, right? But it's the last football analogy I will give in this video. But you take a look at trends in football, right? What's one of the biggest trends that you've seen in a while, right? It's Tom Brady, right? Everybody tries to fade Tom Brady every year. Oh, he's too old, right? But if you have a football team and you need a quarterback in the clutch, who would you rather have? Would you rather have some up and comer who hasn't proved himself yet, right? Or would you rather go with the one that's strong, right? For me, it's probably Tom Brady, and eventually the trend will break, right? Eventually, he is a human being, and eventually that's the trend. He will eventually have to retire, so the trend will break. But it's like trend trading. You stick with the winner until they're not a winner anymore, right? And you don't go after losers just because you think that you've got a reason for a turnaround situation. All right. You want to see, I was giving another example of the Jacksonville Jaguars, right? They may eventually turn it around, but every year they're picking in the top 5, right? That's not a team that I want to put my money allocated towards, right? For most wins this year. I've got to see it. I've got to see it in front of me. I've got to see them prove it first, right? And I think if you're watching some of these companies that look like they're breaking down, right? That's not personally where I want to allocate my money, in areas that, programs, companies that are declining, right? Google, I do like Google. I use Google, right? I've talked about this example before too. Just because you use a company, right? you may use its services. That doesn't mean that the stock is going to be good. They are two different things, right? I use Amazon all the time. I use Amazon Fresh. I use Amazon Music. I order things from Amazon. That doesn't mean I'm going to fall in love with the stock, right? You could like it as a consumer. It doesn't mean that the stock is any good. Google is another one that looks very weak. It's the same, whoops, whoa. It's the same thing, by the way. It's the same principle. This wasn't rallying when the market was rallying either. Very, very weak days, right? Only like the last day, right? The last day of the rally that we saw over the last week did this name get going, right? That's not what you want to see, right? In terms of, a name that could be a potential leader. All right, so that's it for today's video, guys. A lot of lessons, but these are things that we hammer, hammer these points in the trading room, right? In terms of names that I want to own, and of course, having your defined stop in trades. Here's how I mentioned I would show the trading blotter, which will be the last thing that I do, right? And you can kind of see how I traded today. You could see I added this Facebook trade right around 1140. Right, I was actually able to take a target on this, even though I think that this thing has a potential to go much lower. I didn't really do anything with the Qs. I thought about putting, as soon as we got that number out this morning, putting a trade on, but I waited. The action in the day was in the first hour, right, of the trading session. By the time that we got to about 10:30, the damage was basically done for the most part. Right. Then we kind of consolidated for a couple hours. And then once we pushed lower, then I added a short into this, right? Because I do think that we could go down to the bottom of value now that the bearish 80% rule is in place. All right. And that's basically it. Like I said, I took a target in my ENPH trade. I had a couple of these agriculture trades on. I took a couple targets in the SQM, as soon as it kind of got back to around my cost basis and didn't hold in there, I took it off, right? It's just not the time to be messing around with, too many trades right now. All right, guys, thanks for watching. And, the last thing that I'll say is, which was my message to Tribeca Trade Group traders earlier today. Like, if you get caught on a day, here or there, right, just keep in mind, no one is perfect, and this market is very, very challenging to trade from a day-to-day basis. What I would really focus on at this point, right, is depending on where you are in your trading career, is getting better. I have had to make so many adjustments to my trading plan this year. And part of it was through a little bit of error, right? I started off this year really having a poor start to the year, right? I was down 19% in January as the market was kind of changing directions. I was fighting that a little bit until we had the direction that it was lower, right? But every month thereafter, I've been positive since, except for 1 month where I was basically just down, I think 2%. Every other month I've been positive because I just continuously are making adjustments, right, to what this market is doing rather than the market that I want it to be. So that's what it's all about, learning, and moving with this market, not staying rigid, not staying stubborn, not having a big ego, right? Understanding that you have to admit that you're wrong a lot in this market, that will save you P&L, right? And safeguard you against big losses. So don't sweat it if this was a tough day for you. We were talking about as well, keep a trading journal, right? Understand that this wasn't the best risk reward, right? Coming into today to have a lot of longs, right? And it was the same thing back in here before the Jackson Hole meeting that Powell spoke at. I said the same thing. I'm like, going into this Jackson Hole meeting, there's not a lot of edge, right, to try to predict what's going to happen, right? So if you're not taking these precautions, we've also said over and over, right, that this is not a year to be greedy, right? I talk about hitting base hits and doubles and not holding out for home runs. All right, guys, that's it for today's video. Have a great night. See you tomorrow.